If you are thinking about buying a home and you're a little overwhelmed with the entire process, first of all, I don't blame you. And our goal is to make your life as easy as possible, and you are on the right video. So this is the first video in a 4-part series that breaks down the strategies that we use to save our clients tons of money when buying real estate while keeping them protected through the entire process. And in this, I have a lot of information pulled up here on my iPad that we're going to walk through together. And if you don't know who I am, my name is Christian Stubbs. I'm an owner of Onyx Homes, which is a real estate sales team that does hundreds of transactions every single year, meaning we help hundreds of people just like you who are looking to buy, sell, invest all over Southern California. And let's dive right in because I want to get into the meat of this content. So if I pull up my screen here, this is our 7 saving strategies for home buyers. So what I'm going to do is I'm going to walk through, and there are 7 saving strategies. We're going to cover the most important parts in 4 different episodes here. This is the first in a, if you will, a mini series explaining the entire home buying process and going through the strategies that we use to save our clients thousands of dollars while keeping you protected. And if you're wondering why in the world would you need to be protected as a home buyer, that is exactly why we make this type of content, because there's a lot of information that you probably aren't aware of. So let's dive in. The 4 steps to buying a home. Today we're going to be talking about research in this particular video, and we're also in the future videos going to talk about preparation, how to write offers to save as much money as possible without just, or how to get your offer accepted without just paying as much money possible. And then we're going to explain the entire home buying, the escrow process, so that you are comfortable and confident with the entire process. And then I have a bonus for you, which is our buyer strategy session, but that's for a whole other video. So let's go ahead and go through. So the first thing we're going to talk about is research. I have broke this down into a few different things, but the first is the cost of buying. So inside of the cost of buying, you have closing costs, which are, think of it like just the cost associated with buying a home. Now, we also have due diligence, which are what you could expect to have to spend basically doing homework on a property. And the last one is your buyer broker. So I'm going to break each one of these down in more detail. So let's go ahead and do closing costs first. So what I would do is I want to set the expectations. You should be expecting somewhere between 2 and 3%, that's a percent, of the purchase price. Now, it could be more, it could be less. It's probably right in that range. This is rather common. So what exactly are closing costs? I'm giving you what the amount is, but basically what it is, this is like escrow, title, and so many, there's like a million miscellaneous line item things. I'll give you the real. When I bought my first home, I was not a real estate agent at that time, and I saw the closing statement, and I just saw 2 to 3% of the purchase price, $10,000, $15,000, $20,000 in fees, and I'm like, what is all of this? And it's just, the reality is, it's just the cost of buying and selling real estate. Just like when you buy a car, there's doc fees and tax, title, license, and all that stuff. It's I don't say no different, but it is very similar with real estate as well too. So this is the expectation, somewhere in that 2 to 3% of the purchase price range. Now the next thing is your due diligence. So this is really going to be broken down into 2 different categories. So your closing costs are going to be costs that are in escrow, and your due diligence are outside escrow. Now, if you're saying, Christian, what is escrow? You are on the right video, because we're going to break that down, obviously, for you in another portion of this. So outside of escrow just means you're going to be paying for these like on your credit card outside of the deal itself. So this will be your inspections. This will also be your appraisal. Those are going to be the main ones. Those are the main 2 things that are going to be, think of it, cash out of pocket. Now, if I wanted to go in here and add this up for you, let me add a page really quick, because I want to make sure you understand this. So this is the closing cost. Okay, so we have the actual closing cost, right? So 2 to 3%. So if you're buying a $500,000 home, this would be, 10 to 15K. If you're buying $1 million home, this would be 20 to 30K. So this is a lot of money, and I'm not downplaying it. I'm like, it just kind of is what it is, that you are going to be paying these costs. So that's that. And then your inspections. Now, we're going to get into what inspections, why are we doing these things, and all of that. Your inspections are just to make sure you understand what you're getting yourself into with buying that home. You're generally going to be spending somewhere between $500 and $2,000. Really depends on who you hire and what you want to do. Some people go crazy with, in my opinion, too many inspections. And if one of our clients tries to do not enough inspections, they'll get a very strongly worded email on the bare minimums, which we'll talk about later. So that's the inspections, is somewhere between $500 and $2,000. And then the appraisal is going to be somewhere between $500 and $1,200, let's say. So remember, this is in escrow, and this is outside. So like, put it on a credit card, however you want to pay for these things. But let's just say, kind of ballpark, you're averaging like $2,000 here. And then it obviously depends on your purchase price for the closing costs here, right? So those are the major things here. Get rid of this guy. Our closing costs, your due diligence. Now the buyer broker. This is something that not a lot of people really explain, or certainly don't explain correctly. You will generally be paying somewhere between 2% and 3% for your buyer broker. Now, I will be clear, I'll explain how this gets paid, because 99.9% of the time for our clients don't pay directly. Let me explain that in a second. But what I do want to, let me put a star here. What I do want to make sure you understand is that whoever you choose to represent you on the buy side of your transaction, so you're buying a home, whoever represents you, whether it's the listing agent, your friend, your family member, your aunt, your uncle, your hairdresser, or if you hire a professional real estate agent like us, you're going to be paying somewhere between 2 and 3% of the purchase price to that agent. Now, some might be cheaper, some might be more expensive, but that's the general range. What most people don't understand is that they are paying that fee. Now, as I mentioned, 99.9% of the time, our clients don't pay this fee. And it's because we negotiate for the seller to pay by, I'm just going to do buyer broker, right? And this is something 99% of the time, our clients are getting our offers accepted 99% of the time with the seller paying 100% of the commission. There are some circumstances where that doesn't make sense. I would say, for example, if you were paying cash, it might make sense for you to pay that entire fee yourself to get a lower price. There's a lot of different ways that this can work. But again, 99% of the time, our clients aren't having to pay this. But that's not the point. We still explain to the clients who hire us that they are paying us. We're just going to have the seller pay it. And that makes your cash out of pocket, cash out of pocket, your closing costs, actually a little bit less by the seller doing that. Now, for example, if you're saying, Christian, I don't have, I'm putting 5% down, I don't have another 2 to 3%, right? Because if you're doing 5% for your down payment and 2 for closing cost, right? Let's just do CC. You're talking about 8% down. And if that's too much, one thing that we can do is we can do what's called, let me draw a little line here, is seller credit. So I was just talking with an agent. We were going over a strategy for writing an offer for a client that's in this exact same situation. They don't want to come out with a ton of money out of pocket, and we're negotiating the offer. So instead of a larger price drop, we are negotiating for $10K off the price, and we want 3% towards closing cost. And for this buyer, this will save them a little bit of money over on the loan and everything, but this will save them $30K cash in pocket. And this makes more sense than offering less money on the price, because they want cash in the pocket. I'm trying not to, there we go. They're down here at the bottom. This is what we're looking at right here, right? So they want to save cash in pocket. So this seller credit strategy will help lower the closing costs. asking the seller to pay for the buyer broker also lowers closing costs as well too, because otherwise that would be actually included in there. So that is the cost of buying a home. Let's move on. The benefits of home ownership. So this is one of the biggest, things that I don't know why more people don't talk about this. Maybe because of what I'm going to say. This is kind of a CYA for me, is tax savings. I'm not an accountant. I'm not a CPA. I'm not giving tax advice. Don't listen to anything that I have to say. There's my disclaimer. However, most people get tax benefits when buying real estate. There are tax benefits to buying real estate. Here's a few. Your property tax. And one thing that's kind of a side note in here is if you can afford to buy a home in Southern California, you probably need a tax break if you don't have one. So that's one, just kind of a side note. And if you don't know this, you need to talk to an accountant. If you want help going through this whole process, you can always reach out to us. You can go to allaboutoc.com, drop your information. We'd be happy to help. We can connect you with accountants as well too. But again, we're not accountants, but I will give you some general advice here. So property tax, mortgage interest. Also can save money on taxes. The last thing is like maybe you have a home office. And I share these because these are all things I personally did when I bought my home. But these are all tax savings that I had. Okay, so there's that. The next thing is equity appreciation. Well, Christian, what does that mean? This means your home price is your value, let's say, not price. Your value goes up on average 5% per year. Average. Ooh, yikes. Average. And this is compounding. And if you're saying, Christian, you sound like an absolute nerd. I don't know what you're talking about with compounding. Let me explain. I had to explain this to my buddy 100 times. Shout out to Sean. Compounding. Equity. All right, so here's what this means. So if in year one, your home, let's say you bought your home for $500,000 and we get a 5% price appreciation, that means your new home's value is $25,000 more, right? So 5% of 500,000 is 25,000. So that means in year two, your home's value is now worth 525,000. Now, compounding means that it goes up by another 5%, not from the first 500, but it actually goes up from this number, right? So we're going to take 5% of 525 is actually now it's 26,250. Now, it's not a huge difference, not a huge difference, but you'll notice that this is it's $1,250 more than it appreciated last year. And that means on top of. Right, so now we're talking about 51,000 between 2 years. This is a 51,250 increase. And what is this increase to? Your home's value, yes, but also your net worth. This is a term we're going to start talking about a lot in home ownership, right? So now this 525, so now we're at 551,250. Is in year three. So we've owned the home for 3 years and our net worth has increased by $51,000. It's a big amount. However, we also had all of the tax benefits. If you have tax benefits, again, I have to be very careful because I'm not an accountant. Also, tax advice. You also likely had tax benefits as well too, which might have also positively affected your net worth. Now, the last thing is principal pay down. So what happens is you have let me give one more example on this compounding because it's so important. I'm gonna draw a little chart here. I'm gonna say this was in 2008 and this is in 2025, let's say. Now, if you're all familiar, in 2008 there was this huge housing market crash. It was like literally the end of the world, and the median home value in Orange County went from $500K to $350. Massive, a huge drop. And then time happened, and prices just kind of slowly have gone like that. To where now, however many years later this is, the median home price is 1.2 million bucks. Now, let me share a quick story. So one, $350,000 increased all the way to $1.2 million. And this is with that average 5% price appreciation year over year over year. So this example, if I just did this for 15 more years, right? This is 1, 2. If I just did that for 15 more years, you would see how powerful this compounding is. And the beautiful thing is it just happens. So that's number one. Number two is, so we talked about the tax savings. So let me share a story. We had a client that bought her home for $500,000. She was the last person to buy the home before the market crashed. Like the worst timing ever. So if you're in a position where you're waiting, you could not have made a worse timing decision. She bought her home, and the next day it was worth it wasn't the next day, but it went within a year. It went down by $350,000. So she lost $150,000, or what is that, 30% of her home's value in the span of a year. And that sucks a lot. But then what happened is she kept the house, and over the next however many years this is, her home is now worth 1.2 million bucks. So she bought it at 500, and now it's worth 1.2, which is a difference of $700,000. This is a very real example. So her net worth, remember this word? Her net worth went up by $700,000. But wait, she had tax benefits this entire time. The other thing that happened, she had the equity appreciation. So we just talked about this, right? Her home went up by $700,000. And the last thing is principal pay down. So when this lady bought a home, she bought it for $500,000. Let's say she took out a mortgage for $400,000. Right? She took out a loan. Well, she's been paying on this mortgage for more than half of the time. So let's just say she owes $200,000 on it. So this is also a $200,000 net worth increase. So in this amount of time, she's had a 900. This is the 700 here plus the 200 here, $900K increase to her net worth, assuming no tax savings. So this is the way that I explain this to all of our clients is principal pay down is like your piggy bank, right? Your house is like a piggy bank for your money. There's your little chimney. So your house is like a piggy bank. So every single month you make a principal and interest payment. And the principal goes into the piggy bank and the interest goes to the bank. Right? That's how the bank makes money. And then you get some tax savings. Maybe. You get the point. And the rest, the principal goes in the piggy bank, right? Your principal is the piggy bank, is the house. I hope that made sense. That's kind of the visual that I give for all of our clients. And this is why so many people have built so much net worth. More real estates have been made in real estate than anything. So there's all that. There's your compounding equity. Let's talk about affordability. So most people, when they talk about affordability, are talking about payment. They're waiting for, but that's not what they say. So most people, when they talk about affordability, they're saying, I'm waiting for prices to come down. Or what is more common, especially right now, is they're waiting for interest rates. If this sounds like you, listen up, to come down. However, I look at affordability like this. It is payment and down payment. Right? Payment and down. So for example, if you called me and said, hey Christian, I don't know how much house I can buy. I would ask, okay, well, what's your comfort zone on your monthly? And what's your total cash you're willing to invest into a home? Let's say it's $5,000 per month and $200,000 in down payment. Well, what you can do is you can go to our website, onyxhomes.com, and you can click the finance button up here at the top. And you can watch this video and I'll explain how to use it. You can also, if you just want to find out what you are approved for with a soft credit pull, you could just drop your information here and we'll connect you with a mortgage pro. But this is something I think you should play with. So if you called me and said, hey, Christian, let's go to down payment first. And you said you have $200,000 for down payment. Well, and we would have to plug in the interest rate, right? So right now, at the time that I'm filming this, let's just use a 7% interest rate. It's ballpark good enough. And let's say we're looking at, I don't know, townhome condos. So I'm gonna scroll down here. All of this stuff is correct. Let's say there's a $500 HOA, right? Let's just say. And then for a home's value, so we can see for $1 million home with $200,000 down, your all-in payment is going to be something like $7,000 a month. And if you said, well, that's too much, which you did, let's say, okay, what about $750,000? $75,000 would be nice. One more zero. $750,000. Yeah, there we go. $5,065. So that would be the comfort zone with your $5,000 and $200,000. But let's go back. A lot of people are going to say, "Hey, I'm gonna wait for interest rates to come down." And here's what generally speaking, what will happen is when interest rates come down, prices will go up, but payments will actually go down. Right? So let me highlight this real quick. So if interest rates come down, which is what we want, payments will come down, which is what we want, but prices will come up. Let me explain. So I just wrote down this equals, so at 7%, this is $750K. All right, let's use that example. Let's go back to the mortgage calculator. And let's say, Christian, I'm waiting for interest rates to get to 5%. All right, cool. Well, our mortgage payment dropped by, $650. That's awesome. So how much more house can we afford now, right? Let's adjust the price, maybe to $850. And right there, we're at $5,000. So you can afford an extra $100,000 if interest rates come down by 5%. What did I say? $850? But what is affordability? Is it price and payment, which is like the reality, which I understand? Or are we trying to get this? Right? Which of these is better? Well, obviously I'd rather have the lower price, but if I can't find the house that I want, and this is the battle that ends up happening is like, if you can't find what you want now in your comfort zone that you like, then maybe it is a good idea to wait. But if you're looking and you're saying, well, I'm just going to wait a little bit longer to see rates come down so that I can afford what I want, I would hate to see you miss out on more net worth. Because what can happen is you can refinance, right? So let's say you bought this home at $750,000, right? So you bought this home at $750,000, 7% interest rate. And then you go to refinance this over time, and you can actually lower your payment. So if interest rates did come down to 5%, and you already bought the home, you're going to be in that $750,000 house, so $750,000. It's going to be worth now plus $100K. So now it's worth $850,000, and you can refi the loan to a lower rate. Right, let's go to the lower rate. And maybe you're going to drop your payment, so -7, what did we say, $650 a month? And you got the $100K, and you're saving money. So this is what I did. I bought my first home And I'll never forget, my mother told me, Christian, price is the highest they've ever been. You should wait. And if I took her advice, and if I would have waited, I would still be waiting. And this is now, I don't know, 10 years later. I'm glad I didn't wait, because this happened. I think I refinanced 3 different times to get lower and lower interest rates. Prices kept going up 5% every year. And that is how net worth is built. So that is affordability. Now, the last thing I'm going to talk about in home buying is your actual window shopping. So this is contrary to how most real estate agents will talk to you, or like how they like to work. We are very much not normal. What I mean by that is we as a company like to do what we call window shopping. Most real estate agents won't even do anything with you until you're pre-approved and all that. That's total nonsense. It's lazy is what it is. So here's our advice is we're usually working with our clients for 1 or 2 years before they actually do a deal. And as we talked about earlier, our fee, we don't get paid until we close a deal. So we're really free advisors for you until you actually close a deal. And we have no problem with that. Take advantage of it. So what we do is most buyers will actually pigeonhole themselves. They will look at one area, one small price point, one type of home, and not find anything they like until it's really close to their deadline where they have to move. And then they'll open up the search and then panic because there's so many options, and then kind of rush into a decision. So we just want to do the opposite. We want to cast a really wide net, and we want to narrow this down over time, eliminating the things you do not like. So how this looks, you set up your home search and you make it wider than you wanted. If you wanted to move to Irvine, you look at like a 5-mile, 10-mile radius around Irvine. And then you go look at those properties, both in person and online. Online's easy nowadays. You can go to our website, you can go to Onyx Homes, go to the search button, you can set up your search, you can do all that stuff. But you also want to go in person, because guess what? Houses do not look the same online. I know when we market properties, if we get an ugly listing, we market it looks way better online than it actually does in person. If we get a beautiful house, it looks just as good, if not better, in person. But on the other end, there's real estate agents that have the worst marketing in the world that somehow get hired, and they'll make a terrible house look even worse, or they'll make an okay house look terrible, or they'll make a great house look good, like okay. And let me share you a quick story with this. So the last 2 properties that me and my wife moved into, she didn't want to see either one of them. And because I know what I'm doing, I said, hey, I know the area that like I can see through the horrible pictures, that were taken with an iPhone sideways with the finger in it. You know what I'm talking about. I said, let's just go look at them. We were in this particular house we were in for 30 seconds before she was like, this is the one, we're doing this. I'm like, okay, cool, sounds good, loved it. So we got the house that had been on the market for too long, way under market value because the marketing was terrible. And I just know to go look at those homes. Here's your pro tip, is to tour ugly homes. Please, please, please go tour the ugly houses because they don't look the same online. And the point is, you want to narrow this down over time. So if you have 2 years and you're not looking to move anytime soon, but like go look at houses to narrow down your search. So that when you are ready, you already have a very narrowed search and you don't need to go back and expand it over time. You already know that everything you're looking for is in there. So like I said, our company's not normal at all. Here at Onyx Homes, we like helping people out. So if you want to go window shopping with no cost, no obligation, no nothing, just join us at allaboutoc.com. Drop your information, talk to myself and my team, and we can talk about your unique situation, how we can help you move. Again, this is the first video in the 4-step buying process to buying your home. This was research. Next, we're going to be talking about getting prepared so that you can save a ton of money when you actually buy your home. If you found this video helpful, like, subscribe, maybe share it to a friend, family member, and I'll see you in this next video going over how to prepare to buy your next home. Again, my name's Christian. I appreciate you watching. I'll see you in the next one.